Listen, come here. I want you to imagine a road, let's say a rural road, and I want you to pick a single spot and ask yourself a question. At any given moment, do you believe that there are a lot of cars passing that single spot on that road in the middle of nowhere? Or is it more than likely than not that there's only a few cars passing that single spot on a rural road, or if any cars at all at any given time? Now I want you to imagine a second scenario, maybe in the middle of town at an intersection. Is it more likely than not that there is a higher probability of more cars at that intersection in the middle of town than a single spot on a rural road in the middle of nowhere? Now I want you to imagine a third scenario. Let's imagine that there's an intersection in downtown during rush hour. Is it a higher probability that there's a lot more cars, a lot more traffic, and a lot more activity at that intersection in the middle of downtown relative to an intersection just in the middle of town and relative to just a single spot on a rural road? Most people would agree that there's a lot more traffic, a lot more activity happening in downtown during rush hour than any of the other scenarios. Now you might be asking,
Hey, Love Joe, that's cool and all, but what does this have to do with trading?
allow me to explain. Come closer. The reason why we can predict with high accuracy that there's a lot of activity, a lot of congestion happening at that intersection during that rush hour is simply because multiple different factors are creating what's called a confluence. There are multiple factors that all line up that allow us traders to determine with high probability that our analysis is correct. If you use the same type of thought process in your trading, in your strategy, you can get sniper entries in the market to give you a better risk to reward, along with giving you higher probability setups. This is what traders strive for. And in today's video, I'm going to pull back the curtains and show you everything you need to know in order to get these sniper entries yourself. Because if you can identify areas and times where technical analysis and fundamental analysis all align, that can give you high probability setups at areas that are significant in the market. So if that sounds interesting to you, I'd appreciate if you diddle that little like button. And if you're new here, feel free to subscribe. It's free. And if you're already subscribed, welcome back. Let's get started. So the best way for me to explain this is to simply give you some examples. Right now, we are looking at GBPNZD, the pound versus New Zealand dollar, and we're currently on the 4-hour time frame. So let me give you guys an example. Right now, the first thing we need to ask ourselves is the market going up or down? Up or down? And I want you to answer this in your head. Is the market going up or down? And the answer is the market is definitely going up. So in this case, are we looking for a buy or a sell? Most likely we should be looking for a buy. Why? Because the trend is your friend. So now let's go ahead and put some technical. So the first technical I see is a very easy technical to draw here. It's simply a trend line. In order to draw a trend line, for those of you that don't know, is you need 2 points. You need a beginning point to draw a line, and you need a second point to draw a line. That's how you draw lines. You need 2 points or more. So I will go ahead and draw my trend line. You want to try to touch as many points as possible. In this case, I've touched 1, 2, and 3. Notice this area right here. The wicks are protruding the line, but the bodies are still remaining above that trend line. So this is a reason I've drawn the trend line touching here, here, and here. So now, first thing we know is we want to look for a buy. Second thing we got to ask ourselves is, where should we enter the buy? And that, more likely than not, would be somewhere on this trend line. So now we just have to figure out where on this trend line would be a good time to buy. Because when you're doing technical analysis and you're actually trading with the proper strategy, just because the market is going up doesn't mean that's the best place. You can just buy anywhere. It doesn't mean you can just buy anywhere you want. You have to wait for the best time to give you that sniper entry that we talked about earlier. So question is, where would we enter? So now let's figure this out. As the market moves, we notice the market has created a resistance here and a resistance here. So let's go ahead and mark this as a potential zone. Now we notice the market has created a support in the same area. So let's go ahead and extend and modify that to encapsulate that as well. Now we notice the market again has created a support in that same area. So it would be safe to assume that this right here is our rural road. And it would be safe to assume that if this area, this zone of interest is a resistance turned into support, it might be safe to assume that this might be a decent intersection to where a trade might have a higher probability of activating in our favor. So I'll go ahead and draw this intersection, which might be a good place to have an entry to go in the up direction, which is entering a buy, or in other words, going long. So the trade activates in the area, in the zone of interest that we've created. Stop loss should definitely be below the zones that we created. So you have our entry at that intersection. Have an entry at the intersection, stop loss below the zone, and then the trade has activated in our favor. So what actually happened here? Number one, we're trading with the trend. Number two, we're following multiple different technical factors. And number three, we're being patient and waiting for the market to come to us, to come to our zone of interest, to come to our ZOI, and then we're attacking when the time is right. And that is how we get sniper entries and high probability trades to create an edge in the market. So let me give you guys another few examples to really drill this in. So let's go to EURAUD, and we'll go to the daily time frame. So let's do another example. So first question we need to ask ourselves, which direction is the trend moving in? Is it going in the up direction or down direction? I would say this is definitely going in the up direction. So now we know we need to enter a buy, but now we need to figure out when and where should we actually enter that trade. So we notice at this point, the market pulled a low and has now created a high. So one technical we could use is to simply use a fib from the bottom all the way to the top and see how far down the price might retrace. One thing we see is the market is definitely creating some type of zone of interest, some type of resistance turned into support around the 38 fib. So one thing we can do is apply a zone, a ZOI in this area for a potential trade. Next, I like to use the 200 exponential moving average. So let's see where that bad boy is heading. So let me go ahead and enable that as well. So now that the 200 EMA has been activated, we see a few things happening that could potentially give us a very high probability setup to allow us to get a sniper entry. As time passes by, the exponential moving average is slowly creeping up to the 38 fib, which coincidentally lines up with this zone of interest that we've created. So it'll be a very high probability area to enter a buy going in the direction of the trend in this area where the confluences are occurring. Now, as time passes by, the 200 exponential moving average is intersecting with the 38 fib, which is definitely within our zone still. So where is a good time to enter? Right about now. This is an area where it would be a great time to enter your buy and have your stop loss below the zone, below these wicks, below all of this stuff is the area where you need to put your stop loss. That allows you to get that sniper entry and a trade in your favor. So in this scenario, what happened? What were the confluences in this scenario? Number one, the trend was going in the up direction, which means the trade, more likely than not, that we should enter with this strategy should be trading in the up direction as well, which is why we were looking for a buy. The next thing that happened is we saw an area to draw the fib, and we saw the 38.2% retracement lined up with these zones. What else did we determine? We also determined the other confluence is the exponential moving average also lined up in that same exact intersection. So not only were we on that rural road, we were actually on an intersection. And not only were we on an intersection, we were on an intersection in downtown. And not only were we in downtown, it was during rush hour, which allowed us to get a high probability with high certainty that this would be a zone of interest that will allow us to get a trade that's going to go in our favor. Does this work every time? Absolutely not, but it's about creating an edge that gives you a higher probability, greater than 50%, to allow you to create a strategy that gives you more wins than losses. And especially if you can get better sniper entries, you can reduce the stop loss distance to allow you to get a bigger and better risk to reward. Now, before I give you another example, let me explain why this works so well. Let me give you another analogy. Let's say you're planning a trip. Let's say you're planning to drive from San Francisco all the way to Los Angeles. And let's say you have two paths that you could possibly take. Let's say both of these paths are roughly the same distance and roughly the same length. And let's say they roughly take around the same time. Now, you need to determine which of these two paths that you should take. Now, you can obviously look at a map and just kind of see which one takes less time, but there are other factors in play that might alter your decision. There could also be things like traffic or construction, or maybe there's weather on a certain path and maybe another path is clear. Let me put it in perspective. Let's say path A, let's say it's a straight shot down the highway, and let's say on path A, there's a bit of traffic, maybe there is construction, and maybe there's a slight chance of rain, and it might make the drive a little bit dangerous. But let's say path B isn't a straight shot, but it is a little bit windy, but let's say there's no scheduled construction, and the weather shows that it's completely sunny, and there's no traffic. In those two scenarios, which option is a better option to take? One that has construction and has rain and has wet roads, or the other path that has no construction, a little bit longer, but has clear weather and overall a safer route? It is a wiser decision to take route B, to take trade B, because there's a lot more factors going in your favor. So let's look at another example. We'll use the 200 simple moving average this time, and we will go ahead and look at USDJPY. And we'll do the same concept. First thing we need to ask ourselves is, which direction is the trend going? Right now, it is going in a downtrend. So should we be looking for a buy or should we be looking for a sell? I would assume by now that we are all in agreement that we should be looking for a sell. And as the market continues to play, we notice this might be a potential low, so we will go ahead and draw our fib from the most recent high to that low. And what happens if this market goes down even further beyond this low? Very simple. All we would do is we would simply adjust this fib to match the next low. And that's how you would adjust the fib. Now, if this is a low, we need to figure out where could it possibly retrace to. So let's allow the market to continue to move. So the market looks like it is reversing a little bit. A few things are happening right here. First thing we notice is the 38 fib, just like the last example, is now lining up with the 200 simple moving average. And along with that, we do have a support turn into resistance right over here. So what we could do is we could draw a zone on the 38, on this zone, and on this 200 simple moving average. So if we were going to enter a trade, enter any trade, it would be a wise decision. It would be a technical trade to enter a short, enter a sell somewhere in this zone. This is the act of planning the trade and then trading your plan. So just like we discussed in the previous example, the stop loss should definitely be past or above the zone, away from the zone, and the entry within the zone where the market would react. Why? Because there's a lot of confluences, a lot of things that are happening right here that create a high probability that the market would react in this specific area. So as the market approaches our entry, we're now getting ready for the trade. Trade got triggered and we are now active in our sell. We were waiting for the market to come to us, come to that confluence, come to the zone, come to the 200 simple moving average, and also to approach and reach the 38 fib. And at that point, the price melts. So this allows us to have a sniper entry in the sell direction and gives us a high probability for that trade. Now again, does this work every time? No, but the point is to give yourself an edge that you can have a higher probability trade greater than 50-50. So not only were we on that rural road on that downtrend, we also had an intersection, which was the fib, and we also were in downtown where we had that zone. And not only were we in downtown, but we also had that rush hour, which gave us a high confluence setup to enter a short. Now, let me give you one last example. We'll go to EURUSD using the 200 EMA, and we'll try to find the best area to enter the trade. So at this point, we see the current market is going in an uptrend. So should we be looking for a buy or should we be looking for a sell? We should be looking for a buy. So now we need to figure out where should we enter that buy. So let's try to draw a trend line and see where potentially the market could react. So in this case, I've touched the trend line from the first point, the second point, and the third point. So now if we wanted to enter a buy, it would be a wise decision to enter a buy somewhere on this trend line. But the question is, where should we enter the buy? We can see that this 200 EMA is slowly approaching the trend line. So at one point, it will intersect. So now let's draw a fib from the relative lowest to the highest and see if that does anything for us. What fib matches? The EMA lines up with the trend line and the fib. So this might be a decent area to enter a buy if you were going to enter a buy at all. We notice the exponential moving average is creating a support. So what we can do is draw a support and extend it to the future. You'll notice it created another. The price touched the support again in that area. We'll go to the 4-hour time frame to get a better look at what's happening here. And I'll erase this. So if we were going to enter a buy, this would be a decent area to enter our trade. So let's go ahead and draw the zone of interest. Going back to the daily time frame, if we were going to enter a trade, it would be wise to enter a trade somewhere in this confluence area. Make sure we have the stop loss below the zone, and then we wait for the market to come to our trade, and then we strike. The trade got activated, the price pulled back up, now we had our sniper entry and the price continued to go in our favor. So at this point, we need to ask ourselves, what technicals or what factors gave us the confidence in this trade that gave us a high probability setup in this specific area? Well, a few things. Number one, the rural road was the trend was going up. The intersection was we had this trend line, so we knew the trade should be somewhere on this trend line. The next confluence we had was this zone, this support area created the downtown. And not only that, we were definitely in rush hour because we had that 38 fib also line up as well. And if that wasn't enough, we also had this 200 EMA, which essentially created an accident in the intersection and the light was broken. And we had so many different things, so much activity happening right over here, which gave us that high probability setup, which allowed us to get that sniper entry in that trade in the up direction to go long. So in conclusion, let me summarize and recap what we talked about. Day traders, especially in the Forex market, we look at various different indicators and factors that allow us to have a high probability setup based on various things that's happening in the market, whether it's economic news releases, fundamental analysis, or technical analysis, or various different technicals that I've shown you. You can use the technical analysis that you prefer, technical analysis that you use in your trading, but as long as you have multiple factors pointing in that one same spot, that's going to give you a higher confidence, higher probability setup that will allow the trade to go in your favor. So not only do you use the technicals, but you are patient with your trading to allow the market to come to that specific ZOI, that zone of interest, and that's when you strike to get those sniper entries. Now listen guys, this is just the tip of the iceberg. Here at Market Makers University, we deploy so many different things in our trading strategy that allow us to increase our win rate, that allow us to get these type of sniper entries to make sure that we're always winning, that we're always growing our accounts. But I hope this video was tremendously valuable for you. I hope this video was educational and hope this video at least was able to set a foundation to help you understand how to create a strategy for yourself. And for those of you who might want a little bit more help or maybe might want some personalized mentorship, I want you to check the description. If there's still a link to book a call, that means we're taking on more students. So if you want personalized mentorship, click the link in the description, book a call, and we'll have a conversation and see how we can help you. Either way, I'll be pushing out more content, more videos just like this to help you with your trading. So if you found this video valuable, I would encourage you to share this with a friend, and I'll catch you guys in the next video. Take care.